This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill, markets move fast, and if you're not ahead, you're under. The structural cracks in the global economy are getting wider by the day. Let's get you caught up. The 60-second commodities flash. The billion-barrel shock. Saudi Aramco. CEO Amin Nasser dropped a bombshell during an earnings call, warning that global markets have permanently lost approximately 1 billion barrels of oil since early 2026 due to the Hormuz disruptions. The world is bleeding roughly 100 million barrels every single week the Strait stays closed. Nasser cautioned that market normalization could slip into 2027 if a swift resolution doesn't materialize. Crude holds the line. Brent crude is trading near $106.50, while WTI sits at $195. With Saudi Arabia cutting its own output by 2 million barrels per day in response to the crisis, Russia has stepped in as a structurally important swing producer, maintaining a flat 10.26 million barrels per day output. Despite sustained Ukrainian drone attacks on its infrastructure, India's midnight gold shock. In a massive move, the Indian government hiked import duties on gold and silver from 6% to 15%. Effective at midnight, this aggressive compression drive aims to protect foreign exchange reserves. After the rupee hit an all-time low of Rs 95.74 against the dollar, the revised tax structure will raise the landed cost of gold significantly, immediately triggering a 6 to 7% surge in domestic prices. Copper keeps climbing. Despite the geopolitical chaos, copper futures are holding strong on an uptrend near 1403 rupees as global supply tightens. Trump heads to China. President Donald Trump has departed for Beijing for a high-stakes summit with Chinese President Xi Jinping. Flanked by tech titans Elon Musk and Tim Cook, the talks are expected to cover trade, AI, Taiwan, and the ongoing Iran conflict. Before leaving, Trump stated the U.S. does not need Beijing's help with Iran and vowed to win the conflict peacefully or otherwise. Deep dive, the billion-barrel vacuum and the new geopolitical math. The hottest topic, Saudi Aramco's unprecedented supply warning and how the Trump-Xi summit fits into the macro liquidity puzzle. We are no longer pricing in a temporary geopolitical premium. We are pricing in the potential for the largest supply shock in oil market history. Here is what Aramco's warning and Trump's trip to Beijing mean for global trade. The 1 billion barrels lost since the start of 2026 puts this crisis in a category of its own, surpassing the historical dislocations of the 1973 embargo. Nasser highlighted that years of underinvestment in oil infrastructure mean there is less spare capacity to tap and a much thinner margin of error. Even if routes like the Strait of Hormuz reopen tomorrow, it is not the same as normalizing a market that has been so severely deprived. Second, Russia's swing dominance. With Saudi Arabia curbing production to manage the fallout, Russia has quietly assumed the role of the global swing factor. By keeping its production steady at roughly 10.26 million barrels per day, Moscow is elevating its relative market weight. Any sustained reduction in Russian output right now would tighten global balances far more significantly than in historical periods. Finally, the Trump-Xi tech and trade leverage. Trump's visit to Beijing is the ultimate macroeconomic wildcard. U.S. officials have spent weeks urging China, Iran's largest oil customer, to pressure the Islamic Republic into reopening the Strait. By bringing Apple's Tim Cook and Tesla's Elon Musk, Trump is signaling that negotiations will link the Iran war with AI, tech dominance, and Taiwan. The TradeFlow take. We are entering a phase of permanent supply destruction. The Hormuz tax is now a structural reality. If the U.S. and China cannot reach a consensus, expect commodity markets to tighten further, keeping energy and industrial metals in a relentless bull cycle, while emerging markets like India are forced to heavily tax precious metals just to save their currencies. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.